Hi, this is Paige Hyatt with Montana Good Life Properties, brokered by eXp Realty in Bozeman, Montana. Right now, there's a lot of chatter about interest rates because they affect everything, right? I would like to take a minute and challenge your assumptions about interest rates and show you why, even as home prices are higher than they have ever been historically, and interest rates are rising, if you're wanting to make a move in the next 5 years, why now might be the time for you, whether you're a buyer or a seller. First, let's talk about buying power, okay? Buying power is the total amount of money you have available each month for a mortgage payment. Pretty simple. It's any money you saved for a down payment, proceeds from a sale of your current home or a previous home, if that applies to you, and the amount of money you're qualified to borrow. All of these factors impact your buying power. This means as interest rates rise, you'll spend the same amount of money for less of a house. So when people talk about interest rates, we usually assume that increased rates mean a higher monthly payment, right? That's generally how the conversation goes. And while that is true, let's flip that assumption on its head for a minute and start with your current budget for a mortgage payment. So if we begin here and then work backwards, you can get a sense of how powerful interest rates can be when you're trying to determine the amount of house you can afford. Okay, here's an example. Let's say you have a monthly budget of around $1,900 for your mortgage payment, and you're interested in buying another property or your first home with a similar down payment and an increase of just 1% in the interest rate. You'll lose an additional $50,000 in buying power, or what you could bid on that house. As we review interest rates over the last 40 years, even though they are rising right now and they are higher than they were a year ago, they're actually still around the average for what they've been for the last several decades. So what that means, if you purchase right now, you'll get more house than you would if you wait and buy over the next several years, up to the next 5 years. So waiting to purchase means you're paying more to your landlord if you're renting versus building your own equity for yourself. So we are coming out of a period right now where sellers were gaining equity at a breakneck pace. And it was just crazy town. Right now, we're tracking at about 8% equity growth, plus or minus. That's still well above the average over the last 40, 50 years, which was about 3 to 4%. So if you're a seller in this market, it's still a seller's market, although a different one than it was before. Your pool of buyers is still large enough to net you a pretty penny and harness this current market. But if interest rates continue to rise as they're projected over the next 5 years, that pool of buyers will shrink and become smaller. As much as people might like to hear it who are waiting for prices to go down, it's unlikely prices are going to come down dramatically anytime soon. Lower than last year? Maybe, but pre-pandemic pricing, highly unlikely. Prices are stabilizing at some price points, not all, but a significant price drop overall is just not likely. What is happening and what will continue to happen is that rise in interest rates that we talked about. So as those rates continue to rise, it means buyers will be able to afford less. Remember, we talked about that buying power and how interest rates affect the price you can pay for that house. Then for sellers, there will be fewer buyers around for you to purchase that home. So I hope that gives you a little bit of insight if you're thinking of buying or selling right now. If you'd like to chat a little bit more about it, give me a shout, a call, text, check out my website, and I'd love to talk it over for you. See you next time. Bye.